How are tipped employee wages taxed differently? Imagine earning extra money just by doing your job and getting tips from customers. But did you know that the way these tips are taxed is quite different from regular wages? Let's explore how tipped employee wages are handled when it comes to taxes and compliance. When employees receive tips, they need to report all tips of $20 or more in a month to their employer. These tips are then included on their Form W-2, which is used to file taxes. The reported tips are subject to federal income tax withholding, as well as Social Security and Medicare taxes. If employees do not report tips to their employer, they still have to report these tips directly on their personal tax return using Form 4137. This form helps calculate the Social Security and Medicare taxes owed on unreported tips. Employees are responsible for paying their share of payroll taxes on all tip income, whether reported or not. Employers have specific duties too. They must keep records of employee tip reports, withhold federal income tax, Social Security, and Medicare taxes on wages plus tips, and pay their share of Social Security and Medicare taxes. Employers also report wages and tips quarterly on Form 491 and deposit these taxes following federal rules. In some industries, especially restaurants and bars, employers might need to allocate tips among employees if reported tips do not reach a minimum percentage of gross receipts, often around 8%. This ensures everyone gets at least the minimum wage when tips are combined with base pay. It's important to remember that not all extra charges are tips. Service charges or mandatory fees added to bills are treated as regular wages and are taxed accordingly. Recent laws enacted in 2025 introduced a new benefit. Eligible workers can now deduct qualified tips from their federal income tax, which means tips may not be taxed as income from 2025 to 2020. However, Social Security and Medicare taxes still apply to all tip income, and employers must continue withholding payroll taxes. To stay compliant, employers should have clear systems for employees to report tips accurately and timely. They should also maintain proper records and update payroll systems to reflect the separate treatment of tips. Employees need to be aware of their reporting obligations to ensure all tip income is taxed properly. In summary, tips are taxed differently because they are considered additional income that must be reported separately for income tax and payroll tax purposes. Employers have specific withholding and reporting duties, and employees must report all tips honestly. The recent changes mainly affect how tips are treated for federal income tax, but payroll taxes still apply to all tip income. Knowing these rules helps ensure everyone stays within the law and wages are paid correctly.